Welcome back to the deep dive. We're diving into a topic that some traders might find a little, well, let's say, unsexy.
Money management.
Precisely. We're exploring A Trader's Money Management System by Bennett A. McDowell.
This book can really change how you think about this often overlooked aspect of trading.
McDowell argues that, well, mastering this unglamorous but essential part of trading is truly the secret sauce to consistent success.
He's got a way of drawing you in right from the start. Doesn't just lecture about money management, He shares these gripping personal stories. Really brings home the point of what happens when you don't have a solid plan.
Oh yeah, the anecdote about applied material stock, AMAT, really got me.
Oh, tell me about it.
He's shorting the stock, right? He climbs against his analysis, ends up losing, what was it, $30,000?
Ouch.
And then the real kicker, the stock reverses course right after he closes his position.
It's a potent reminder for all of us. Even for seasoned traders, emotions can lead to some really pricey mistakes. And McDowell really hammers this home. He emphasizes, if he had used a stop loss order, he could have limited his losses and potentially even profited from that uptrend that followed.
It underscores this central point, the importance of developing a risk control mindset.
Yeah.
Your psychology, a solid money management plan, really hinges on that, on understanding and managing your emotional responses to those market swings.
He builds on this with the idea of the trader's mindset. And I love how he uses this yin and yang analogy. Illustrates how the most successful traders, they don't just focus on their strengths. They acknowledge their weaknesses. They even embrace them.
So, for example, let's say you're naturally impulsive. Doesn't mean you can't be a successful trader,
Right.
but you need to create systems, create strategies that actually, account for that impulsivity.
It's all about self-awareness, right? Tailoring your approach to your personality, to who you are. And the book, it even provides a really helpful checklist to help you identify, what are your strengths as a trader, what are your weaknesses. And McDowell argues this self-knowledge is absolutely crucial because, well, risk is inherent to trading,
You
right?
can't eliminate risk completely, but the risk of ruin, wiping out your entire account
Yeah.
is something you can definitely manage.
And he uses this brilliant analogy. He compares trading to running a casino.
Love that analogy.
So casinos, they don't win every hand of blackjack, right? Every spin of the roulette wheel. But they manage risk so effectively that their profitability, it's almost guaranteed over time. And it highlights this crucial distinction for traders. It's not about focusing on winning every single trade. It's about overall performance. Casinos, they're not getting emotionally attached to every hand. They're focused on the mathematical edge that ensures their profitability over the long run. And that's a big shift for a lot of traders to make mentally.
So how do we apply this casino style risk management to our own trading?
Right.
Well, McDowell introduces this concept called the optimal F formula.
Oh, interesting.
And this formula helps you determine, what's the ideal percentage of your capital to risk on any given trade. And it's based on, on your own trading statistics.
And what's really fascinating is that this formula, it's not for the faint of heart.
No.
It's designed for traders who are confident in their systems and they're looking to maximize returns. It's actually more aggressive than those traditional risk of ruin tables.
So it's really for traders who are comfortable with a certain level of risk and understand the importance of balancing, potential reward with potential loss. It's not about reckless gambling, it's about calculated risk taking.
Absolutely. And no matter how aggressive you are, McDowell is a huge proponent of using stop loss orders. He considers them essential for managing risk effectively.
But he goes beyond just saying use stop loss orders.
Right.
He actually details different strategies for setting your stop loss exits and stresses. They should be determined by the market dynamics of each trade, not just some, random dollar amount.
Like he talks about the bullish pyramid trading point. It
Yeah.
uses specific chart patterns to identify not only your entry point, but your initial stop loss exit as well.
I find this idea so fascinating. Instead of basing your stop loss on some arbitrary number, you're using the market's own behavior to inform your risk management decisions.
Exactly. You're aligning your risk management with the actual price action of the asset you're trading. It feels a lot more strategic than picking a random percentage or dollar amount.
Now, moving beyond stop loss orders, McDowell also introduces techniques for scaling out of and scaling into trades.
Okay.
So these are strategies for managing your position size, as a trade progresses, locking in profits as it moves in your favor, or carefully increasing your exposure as the trend strengthens.
And it's so important to understand the difference between scaling in and just, doubling down on a losing trade. And McDowell really cautions against doubling down. You're increasing your risk when the trade is already working against you. That can be a recipe for disaster.
So scaling in is more about capitalizing on momentum, but still staying within your predefined risk parameters, while doubling down is, well, it's more like chasing those losses, hoping for a sudden reversal.
Right, right. And finally, McDowell really emphasizes the importance of meticulous record keeping for any trader who wants to improve.
He even provides these specific forms, guidelines for tracking your trades, calls it the trader's assistant.
I like that.
And he shares this really interesting anecdote about analyzing a student's monthly trade ledger. And he discovers that a low win ratio in a particular month had actually led to higher commission costs, which were significantly eating into the student's profits.
It really shows how seemingly small details can have a big impact on your overall results, right? And without detailed records, you're essentially operating in the dark.
Yeah.
You can't identify those patterns or pinpoint areas where you can improve without those records. You're flying blind, really. You can't see the forest for the
I
trees.
can't make those course
And
corrections.
exactly.
So McDowell really dives deeper into this idea of risk of ruin, which I have to admit can be a little daunting.
Oh, for sure.
What specific tools or strategies does he offer to help traders wrap their heads around this and manage it?
Well, he introduces these risk of ruin tables. They show the probability of depleting your account, basically based on factors like your win ratio, the average profit you make on winning trades, and the percentage of your capital that you risk per trade.
It sounds like those tables could be a real wake-up call. Forcing you to really confront those vulnerabilities based on your trading style and your risk tolerance.
Absolutely. They give you a clear picture of how much capital you can safely risk on each trade to avoid those catastrophic losses. And he also provides this helpful tool for calculating trade size. This calculator considers your account size, your desired risk percentage, your entry price, your stop loss exit point, and even factors in those commission costs.
Sounds incredibly practical.
Yeah.
It takes the guesswork out of determining how many shares or contracts to trade, ensuring you're maximizing your capital while sticking to those risk limits.
It really is. And he provides a great example using IBM stock. So let's
Yeah.
say you have a $50,000 account and you're aiming for a 2% risk on each trade. With specific entry and stop loss prices, the calculator might recommend trading, say, 753 shares, taking into account those commissions.
It just shows how money management brings discipline and objectivity to trading.
Right.
You're not relying on gut feeling or emotional impulses. You're making these calculated decisions based on a predefined plan.
Precisely. And he even illustrates how to manage risk effectively when you're using a margin account. So in his example, the margin required is much lower than the total value of the trade. But if the trade moves against you and hits your stop loss, your loss is still limited to that 2% of your account. So $1,000 in this case.
Reinforces the point that successful trading isn't about eliminating risk entirely. It's about intelligently managing it. Tools like margin can be powerful, but they have to be used responsibly within a framework that safeguards your capital.
And he dedicates a whole chapter to his trader's assistant system, this meticulous record-keeping system, right? He provides detailed templates, including these trade posting cards where you log every single trade and you capture not just the numbers, but also your emotional state at the time of each trade. And these cards are then compiled into weekly and monthly ledgers.
It sounds almost therapeutic. It's not just about crunching numbers. It's about documenting your psychological journey as a trader. And that kind of self-reflection can be incredibly valuable, I think, for understanding the why behind your actions.
Oh, absolutely. It really speaks to McDowell's kind of holistic approach, right? He recognizes that trading involves psychology just as much as it involves numbers. And then he showcases the power of this system by sharing the results of one of his students who engaged in paper trading for an entire year.
Well, could you explain paper trading for those who may not be familiar? I understand it's essentially simulated trading, allowing you to practice strategies with virtual money before you risk real capital.
It is. It's a fantastic way to hone your skills, to test your system's effectiveness, and to build confidence without the emotional and financial pressures of live trading.
So this student diligently recorded all their paper trades, their wins and losses, building this treasure trove of data, which revealed some pretty valuable insights over that year.
Right, and McDowell walks us through analyzing this data. He suggests examining a profitable month, say January, for this particular student, to identify those patterns that contributed to that success. So maybe they maintained exceptional discipline with their stop losses, or maybe they skillfully navigated those volatile market conditions.
Then he contrasts this with a less successful month, perhaps June, to uncover potential pitfalls. Maybe this analysis reveals overtrading, or chasing losses, or letting emotions dictate those exits.
And the takeaway is crystal clear. These record-keeping systems aren't just about tracking your profits and losses. They're about understanding the underlying reasons behind those outcomes, the why behind your successes and your failures.
It ties back to his emphasis on identifying your strengths and weaknesses as a trader. The goal is to create strategies that amplify your strengths and mitigate those weaknesses.
And he even includes this checklist to help you assess your what he calls your discipline profile. It encourages honesty about your natural inclinations.
Yeah.
Are you disciplined and able to stick to your plan, or do you tend towards impulsivity and emotional decision making?
It all comes back to self-awareness, right?
Which is great.
You don't have to become a robot to be a good trader. You need to understand your tendencies and build systems that account for them.
And once you understand your risk tolerance and your discipline profile, you can then develop this customized trading plan. He even provides a template for this that outlines your entry and exit rules, your stop loss strategy, your position sizing approach, and plans for scaling in and out of trades.
It's like you're constructing this personalized trading machine, specifically engineered for your psychological and financial parameters. It takes the guesswork and the emotional reactivity out of the equation.
That's a fantastic analogy. He's empowering you to merge those insights, glean from his personal anecdotes, his risk management tools, and his record keeping system into this plan for confident and consistent trading.
So it signifies that transition from theory to practice, right? It's about taking action and implementing these principles in your trading. Speaking of practice, McDowell devotes an entire appendix to the art of paper trading. He walks through the benefits of using a simulator to refine those skills, test strategies, and build that confidence before risking real capital.
Paper trading, it often gets kind of dismissed as a tool for beginners, but McDowell argues that even experienced traders can benefit from a simulator. It allows them to test new ideas, to refine existing strategies,
Yes.
and to stay sharp in a safe environment.
I love how he makes this parallel to the world of aviation.
Yeah.
Pilots spend countless hours in flight simulators. And it's not because they lack the skills to fly a real plane. It's because it provides this safe space to practice emergency procedures, to familiarize themselves with new aircraft, and to maintain that expertise.
It's a brilliant comparison. Paper trading, it's not meant to replace real-world experience, but rather to complement it. It provides that controlled environment to learn, to experiment, and to make mistakes without the high stakes of live trading.
And McDowell, he provides this 10-step plan for effective paper trading. He emphasizes the importance of treating those simulated trades with the same diligence and discipline as real trades, utilizing those same trade posting cards and ledgers.
He advocates for building those good habits from the very start. It's like training for a marathon. You wouldn't show up on race day without putting in the miles beforehand. Paper trading allows you to build that endurance, to test your gear, to fine tune your strategy before entering the real race.
Well, it seems like we've covered a lot of ground in this segment. McDowell has offered this wealth of practical tools and thought-provoking insights to help us elevate our trading game.
As we wrap up our deep dive into a trader's money management system, I'm really struck by how McDowell takes this topic, something often seen as dry and technical, and turns it into something engaging, almost transformative.
He's really got a gift for that, doesn't he? Bringing these concepts to life.
Mm.
And in his concluding chapter, he really underscores this powerful message. sustainable success in trading, it's
Hmm.
not about finding that elusive holy grail system that guarantees a win on every trade.
No magic bullet.
None whatsoever.
Okay.
It's about cultivating this deep understanding of ourselves as traders,
Hmm.
mastering our emotions, meticulously managing risk, and forging this disciplined approach that we can stick to even when things get crazy in the market.
Having that resilience. Exactly. He argues that true mastery, it lies in embracing that inherent unpredictability of the market. We're never going to achieve perfect foresight, but we can control our responses, our risk exposure, our reactions to both winning and losing trades.
It's almost like shifting our perspective completely.
Yeah.
Instead of trying to conquer the market, we turn inward. We try to conquer our own biases, our
Hmm.
impulses, our emotional reactivity. We learn to navigate those psychological pitfalls that often trip traders up.
It's empowering, isn't it? The market, it might always remain this realm of uncertainty, but we hold the power to shape how we engage with it. We can succumb to fear and panic, or we can choose discipline and objectivity guided by those principles of sound money management.
And one thing I really appreciate about McDowell is his commitment to clarity, to accessibility. He doesn't get bogged down in complex formulas. He really strives to make these concepts understandable for a wide audience.
He does a phenomenal job of that, wouldn't you say? His relatable anecdotes, his clear explanations of concepts like the optimal formula, and his detailed examples of implementing his record keeping system. It really demystifies this world of money management for traders of all levels.
Absolutely. He doesn't shy away from introducing those more advanced concepts, but he always brings it back to those core principles, understanding risk, managing your emotions, exercising discipline in your entries and exits. And he stresses that his trader's assistance system, it's not limited to any specific market. It's applicable to futures, to stock, to options, even longer term investment strategies.
It highlights that universality of these principles. No matter what your trading style is, what asset class you prefer, sound money management, it's a timeless cornerstone of success.
It really is. And he encourages readers to really dig into the appendices, particularly those focused on calculating trade size and engaging in paper trading. Those sections offer a ton of practical tools and exercises to really bring these concepts to life in your own trading.
I couldn't agree more. This book, it deserves to be well worn, filled with dog-eared pages and highlighted passages and scribbled notes in the margins. It's not a one-time read. It's a guidebook to accompany you throughout your trading journey.
It's almost like McDowell acts as his virtual mentor, offering those gentle reminders. Remember your stop loss. Don't chase losses. Trust your system. And he leaves us with this thought-provoking question. What if the true holy grail of trading isn't about predicting the market's every move, but about mastering ourselves?
That's such a profound question, and it really encapsulates what we've been exploring in this deep dive. Perhaps the most important journey for any trader, it's not relentlessly chasing profits. It's about cultivating self-awareness, discipline, and this intuitive understanding of risk. These qualities, they form the foundation for consistent success in the ever-changing world of the markets.
So as we conclude this deep dive, I invite you to really contemplate that question. What what aspects of your trading psychology, could benefit from a little bit of mastering? How can you integrate McDowell's techniques for risk management, for record keeping into your approach?
Remember, trading is a journey, not a destination. There will be ups and downs, triumphs and setbacks. But by embracing those principles of sound money management, you equip yourself to navigate those inevitable challenges and emerge as a more confident, more consistent, and ultimately more profitable trader.
Now, as promised, we'll leave you with 10 key takeaways from our deep dive into a trader's money management system. Number one, money management, though frequently overlooked, is absolutely essential for achieving sustainable trading success. Number two, understanding your own individual trading psychology is as crucial as mastering any technical strategy. Number three, embrace both your strengths and your weaknesses as a trader and tailor your approach to fit your unique personality. Number four, risk is an inherent part of trading, but the risk of ruin can be effectively managed through disciplined practices. Number five, utilize stop-loss orders religiously to safeguard your capital and limit potential losses on every trade. Number six, Base your stop-loss exit points on the specific dynamics of the market, not on arbitrary dollar amounts or percentages. Number 7. Scaling out of winning trades allows you to lock in profits and minimize emotional stress as a trade progresses. Number 8. Resist the urge to double down on losing trades, as this dramatically increases your risk exposure when a trade is moving against you. Number 9.
Maintain meticulous records of all your trading activity to gain valuable insights into your performance and identify areas for improvement. And finally, number 10. Remember that consistent profitability over the long term is a far more rewarding pursuit than chasing those fleeting outsized wins. That concludes our deep dive into a trader's money management system. We hope you found this exploration valuable and feel inspired to integrate McDowell's wisdom into your own trading journey.
Until next time, may your trades be profitable and your risk always carefully managed.